Do you think investing requires a lot of money? Well, it's time to debunk that myth. Investing doesn't always require a large sum of money. Even with a modest budget, you too can begin building wealth and working towards your financial goals. First things first, set clear financial goals. Whether it's saving for retirement, buying a home, or building an emergency fund, having a clear objective is key. Once you have your goals set, it's time to create a budget. Understanding your income, expenses, and how much you can allocate towards investing is crucial. Before you start investing, remember to set up an emergency fund. An emergency fund acts as a financial safety net, covering unexpected expenses without disrupting your investment journey. Now that you're prepared, let's explore some low-cost investment options. Consider robo-advisors. These are digital platforms that use algorithms to create and manage a diversified investment portfolio. They typically have lower fees compared to traditional advisors. Exchange-traded funds or ETFs are another good option. These funds track a specific index like the S&P 500 and are traded on stock exchanges. They offer diversification at a lower cost. You can also invest in fractional shares. Some platforms allow you to invest in a fraction of a single share of a stock or ETF, enabling you to start investing with smaller amounts of money. Direct stock purchase plans, or DSPPs, are offered by some companies, allowing you to buy shares directly from them, often with lower fees and without the need for a broker. If available, contribute to employer-sponsored retirement accounts like 401(k)s. This is essentially free money if your employer matches your contributions. Micro-investing apps like Acorns or Stash allow you to invest spare change or small amounts of money into diversified portfolios. These can be a great way to start investing with a small budget. Explore tax-efficient investing. Consider tax-advantaged accounts like individual retirement accounts or Roth IRAs, which offer tax benefits for long-term investing. Remember, investing with a small budget may not yield immediate returns. Embrace a long-term perspective to allow your investments to grow over time. Take the time to educate yourself. Learn about different investment options, risk tolerance, and how to build a diversified portfolio. Avoid high fees. Be mindful of fees associated with investment platforms, funds, or advisors. High fees can erode your returns, especially with a small budget. Even with a small budget, aim to diversify. Spread your risk across different asset classes to potentially increase returns. Finally, stay patient and consistent. Investing is a marathon, not a sprint. Stay committed to your investment strategy and avoid reacting to short-term market fluctuations. In conclusion, starting to invest with a small budget is not only possible, but also a crucial step towards building wealth. By leveraging low-cost investment options, taking advantage of tax benefits, and staying committed to a long-term approach, you can make meaningful progress towards your financial goals. Remember, every small step you take towards investing has the potential to grow into something significant.